So it's that time. Time to buy your next or even your first home. And you're ready to start looking at properties and making offers. Not so fast, my friend.
Yeah.
Not so fast. First things first. First thing starts with the money. Everything starts and ends with the money. And in most cases, the money situation requires a liaison with a lender. But not all lenders are created equal. So, in order to choose a lender, you're going to want to do your own vetting process. I personally recommend working with local lenders as there are acute nuances to every situation, and the more localized you can get, usually the better, especially if the underwriting is done in house. It's just a quicker, smoother process with better communication throughout. Another thing with local lenders is if you're in the seller's market and you're having to make competitive offers, your offer will be much stronger knowing that you can have a normal escrow time or even a quicker escrow period. Along with that, you'll want to know whether or not that local lender is going to sell your note once it is processed. So that's a question to ask. So I've stressed before, your main priority is to understand and know your goals, your own goals intimately. Once you understand your goals according to your situation, the first thing you'll want to know is what types of programs the lender offers. For example, do they have special programs for first time home buyers, down payment or closing cost assistance programs? Do they do any type of subprime lending and creative financing for investment properties or for properties that you may not necessarily qualify for using conventional underwriting? Keep in mind different programs like down payment assistance can affect your rate greatly. Remember, nothing is free, so somebody's going to make up the difference in that money somehow. Which leads me to my next point, and that is to understand what the current interest rate is. This number actually fluctuates on a daily basis, but generally it stays within a relative range for any given period of time. It can, however, change dramatically over a period of time. It can, depending on the market conditions and if your time horizon for buying is 90 days or longer, you may want to ask the lender if they offer rate locks, which will lock in a rate for a certain amount of time, usually 3 to 6 months out. Again, nothing's free, so there are fees associated with this. Another thing to consider in your lender is the fees and the cost. Usually they are in the same range, but there are variables. You shouldn't have to ask about the fees because that's usually the first thing that they're going to discuss with you up front. You'll see mortgage points or discount points advertised when it comes to mortgage rates, and that just means the ability to pay a fee up front directly to the lender in exchange for a reduced interest rate, which can lower your monthly payments. Why would somebody do this? Perhaps first they have the cash reserves for it and they plan to stay in the house for a long time, or at least until they have considerable equity built up, or they actually start paying down the principal, which on a 30-year loan takes about 7 years before that actually begins. That's a personal call. But if you're part of the average majority who moves every 5 to 8 years, then you may consider skipping buying mortgage points. It's just something to consider. As far as closing costs is with what everybody asks about. Closing costs, they vary, but within a range that you can generally expect to pay 2 to 4% of the sales price. So these are just some things to consider when you are vetting a lender. When you're working with a builder, a lot of times they will have you refer you to a network of lenders, to their own network of lenders. I'll discuss that in another video.